How we turned a $1.8 million business into $12 million in revenue, $2.4 million in profit, and 5 property acquisitions in 12 months. So 18 months ago, we helped a client acquire a legacy business. The fundamentals were solid, the systems were broken. Most business buyers make the same fatal mistake. They rush in with immediate changes. They destroy the very foundation that made the business valuable. We took a different approach. The first 90 days, watch and learn. We implemented our 90-day observation rule. No major changes, no knee-jerk reactions, just careful analysis. During this period, we identified the real bottlenecks. We studied what worked, we mapped what didn't, we built trust with the existing team. Quarter 1 result, $144,000 in profit. The patience paid off. We had a clear roadmap for growth without breaking what already functioned. Quarter 2, revenue focus. We rebuilt the financial model from the ground up. Every metric was analysed, every lever was tested. Our focus was simple: drive top-line growth while maintaining operational efficiency. The numbers spoke for themselves. Revenue jumped from $1.8 million to $2.1 million for the quarter. Profit increased to $244,000. That's a growth rate of 17% in 90 days. The foundation was stronger, the momentum was building. Quarter 3, strategic investment phase. Growth revealed new bottlenecks. The operations couldn't handle the increased volume. We faced a choice: maintain current levels or invest for scale. We chose scale. Major operational investments were made. New systems were installed. Staff were trained. Processes were optimized. The short-term impact was predictable. Revenue grew to $2.36 million, but profit dropped to $95,000. This wasn't failure. This was strategic positioning for explosive growth. Quarter 4, the breakthrough. The investments delivered exactly what we projected. The new systems handled increased volume effortlessly. The trained team operated at peak efficiency. The optimized processes eliminated waste. The results exceeded expectations. Revenue, $3.14 million. Profit of $620,923. Annualized, this represented $12 million top line, a 3 times increase, and $2.48 million profit, a 4x increase. The wealth multiplication effect. We increased profit, created immediate opportunities. The client now had the cash flow to execute their wealth strategy. 5 quality investment properties will be acquired this year. Each property will generate additional income streams. The portfolio will build long-term wealth beyond the business. This is how you multiply success. Business profits fund investment opportunities, which create passive income, which funds more investments. There are 3 critical success factors. 1, patience creates clarity. The 90-day observation period was crucial. It revealed the real problems, not the obvious ones. It built team trust. It prevented costly mistakes. Most buyers waste the first 90 days fixing symptoms instead of identifying root causes. 2, financial model mastery. Understanding which levers drive the biggest impact separates successful buyers from failed ones. Revenue per customer, conversion rates, operational efficiencies, these metrics determine everything. We identified the 3 highest impact levers in this business. Focusing on these delivered 80% of our results. 3, investment before harvest. Quarter 3's profit drop was intentional. The operational investments were essential for scale. The temporary reduction in profit enabled permanent increases in capacity. Short-term thinking kills long-term success. Strategic investments create exponential returns. The path forward. The formula is proven. Acquire businesses with good fundamentals. Observe before acting. Fix the financial model. Invest for scale. Convert profit to wealth assets and repeat the process. This client will acquire more businesses. Each acquisition will be faster and more efficient. The wealth portfolio will compound. The cycle will accelerate. So your next steps. If you're considering business acquisition, remember these principles. Start with businesses that have good bones but poor systems. These offer the highest upside potential. Plan your first 90 days as observation, not action. These insights you gain will guide every future decision. Master the financial model before making operational changes. Revenue growth without profit is worthless. Think in quarters, not months. Some investments take time to show returns. Connect business success to wealth building. Profit should fund assets that generate passive income. The opportunity exists in every market. This question isn't whether you should acquire a business. The question is whether you have the discipline to follow the proven process. Business acquisition isn't about finding perfect companies. It's about applying systematic improvements to good companies with fixable problems. The client's success wasn't luck. It was methodical execution of a tested framework. The same framework works for any industry. The same principles apply to any size business. Your wealth strategy starts with your next business decision. And if you'd like some help putting that strategy in place, feel free to reach out to us, complete the financial performance scorecard, and let's help you get this sorted.